The economic impact of COVID-19 has really hit home. We're all staying home, and some are having trouble paying for their homes. The good news is there is help for borrowers struggling to pay their mortgages. If you have a government-backed loan that is owned by Fannie Mae, Freddie Mac, or an FHA, VA, or USDA mortgage, you can delay your monthly payments for up to a year under the government's relief program, the CARES Act. It is not a freebie, though. You will eventually have to make those payments, but you can get a reprieve for a while. The formal name for it is forbearance, and no, it will not hurt your credit score. First, you have to ask for it. Don't just stop paying your mortgage. You need to call your mortgage servicer. This is the name on your monthly mortgage bill or your online payment portal. Call and ask if your mortgage is government-backed. If it is, then you can start the request process either by phone or, if they offer it, online. If your mortgage is not government-backed, don't worry. Most lenders are offering some kind of relief for borrowers. But if your loan is government-backed, which the majority are, you can start. First, you'll be asked to describe your circumstances. And here's the most important part. Don't lie. You are not required to submit any proof or documentation of your answers, but if you lie, it will come back to bite you when you're setting up your repayment or modification plan later. Just explain how the COVID-19 national emergency has hit your wallet, like job loss, reduced hours, or illness of you or a family member. Next, the servicer should explain to you the forbearance plans available. Take notes so you can go back and ask specific questions if you have any. You can miss partial or full payments for up to a year, but you may start with 3 months. The servicer should explain that once you complete your first plan, you can be reevaluated to extend your forbearance if need be. If your circumstances improve, you can also cancel your forbearance plan. Forbearance includes your principal and interest payments, but if you pay your taxes and insurance outside your mortgage payment, you'll still need to do that. One thing to think about, if you can make your partial mortgage payments each month, that'll help out a lot in the end. So then, what's the path forward? How does this end? Well, your servicer should reach out to you 30 days before your plan is up to discuss the following options. You could make all your missed payments in one big lump sum, but you don't have to. Your servicer can set up a repayment plan for you over time, perhaps adding a bit to your regular monthly payment. If you're still in trouble financially, your servicer can look into a mortgage modification, which changes the terms of your loan. There are several different modification options, and some will require documentation. So, like I said before, don't lie. That's financial fraud for real. This may all seem very stressful, but millions of borrowers have already done it, and likely millions more will. Just have patience and make sure you really need this. It is not for people who can afford to pay their mortgages. Diana Olick, CNBC.